So today we're going to be talking about Trump's taxes.
After more than 7 years of...
When are you going to release your tax returns?
Probably over the next few months. They're being worked on right now.
Former President Donald Trump's tax returns have been released.
Is what he wrote off illegal? And is he going to jail? Or is it much ado about nothing?
The documents raise more questions about the former president's taxes and how the IRS handled them.
He didn't pay any federal income tax. So
that makes
if
me
he's
smart.
Paid...
See, I understand the tax code better than anybody that's ever run for president.
The Trumps only paid $750 in income taxes.
Did you really think that Donald Trump was going to be all above board and pay taxes? So the Democrats just released Trump's taxes for the world to see. What's in Donald Trump's taxes? Is what he did or what he wrote off illegal? And is he going to jail? Or is it much ado about nothing? That's what we're going to explore a little further in this video. So let's dive into the crux of the matter. Trump didn't want to reveal his taxes. The Democrats wanted him to reveal his taxes. If you're a president in office, you have to show your taxes. Well, I guess the Democrats got fed up. They took this all the way to the Supreme Court, and eventually they got his taxes released. There's $100 million currently at stake that the IRS wants back that Trump is currently fighting. Will this bankrupt him? Will he have to pay it back? And will he have to go to jail? So we're going to start diving a little deeper by just looking at some of the creative ways that he wrote stuff off. And notice my Donald Trump-esque, I don't know why he does this, like whatever this is, right? Like this, that makes me very, very smart. Very smart, very smart, very smart. Okay. I could do that all day long. Diving into some of the wild things that Trump wrote off over the years. One of the ones that stood out to me was something called a conservation easement. Now, if you're wondering what that is, I also was wondering what that was. Here's the definition. To be eligible for a deduction, land needs to meet at least one of the four broadly defined conservation purposes. This includes protecting relatively natural habitats, historic sites or buildings, land for public recreation or education, and open space, including farm, ranches, and forests. Based on the claimed value of the easement deduction, landowners can deduct up to 50% of their income in 1 year and any remaining write-off over the succeeding 15 years. Farmers and ranchers can deduct 100% in any period for 1 to 16 years. The landowner can continue to own and use the land as before and even build on a portion of it subject to agreed restrictions. In 2005, Donald Trump took a $39 million deduction on his private golf course in Bedminster, New Jersey. In 2014, he donated an easement on an 11.5 acre driving range in Los Angeles. In both cases, he pledged not to build houses on the property. All told, Trump has made at least 5 easement gifts, generating more than $100 million in write-offs. I saw this and I was like, you have to be shitting me. You still get to own the land? And you could just say, hey, you know what? I own 100 acres. And I'm not going to build on 11.5 acres and you get to write that off? Diving a little more into it, I looked at the IRS website. Abusive tax shelters, trust, and conservation easement makes IRS 2019 Dirty Dozen list of tax scams to avoid. The IRS has it on their websites. Like, yo, like, don't do this. What are they going to do to Trump? Do they have the resources to prove that his conservation easement write-offs were tax scams? Trump has a whole bunch of legal teams and organizations helping him prove that this is legal. I bet you if we pull up other politicians' taxes, that they're using the exact same write-off that Trump is, which is why nobody's gone after him. So now let's talk about the second one. Trump showed a $950 million loss on his 1995 tax return, which allowed him to carry over losses for years into the future. Right, here's what the New York Times says. 3 pages of his 1995 returns mailed anonymously to the Times during the 2016 campaign show that Mr. Trump has declared losses of $915.7 million, giving him a tax deduction that could have allowed him to avoid federal income taxes for almost 2 decades. So before we go into is this write-off legal or not, let's talk about what a tax loss carryforward actually is. A tax loss carryforward or carryover is a provision that allows a taxpayer to move a loss to future years to offset a profit. The tax loss carryforward can be claimed by an individual or a business to reduce any future tax payments. Like, let's say you have like a really bad year of business. That's almost like a tax coupon. So like if you're profitable the next year, you could just use that write-off or the tax loss year to kind of offset any income and not pay any income taxes. Business Insider actually said it's pretty rare for Americans to claim negative tax income on their taxes like the Trumps did for 4 years between 2015 and 2020. So I know I'm talking about the 1995 $915.7 million loss, but the funny thing about it is that this is one of Trump's main tax strategies. So anytime he had a profitable year, he can always just go back to a year where he lost money and just write stuff off. And then the government has to go prove that those aren't real write-offs. I looked at Business Insider, and this one's very, very interesting, right? So look at this chart. This is from tax year 2020, but what this shows is the number of tax returns at each adjusted gross income. So the amount of people that filed, adjustable gross tax income under $1 was 5 million. $1 and $10,000 is 20 million. Just showing this to point out the fact that rich people ain't paying no taxes in this country. Not really judging it, right? I don't really have an opinion on it, but I just think it's interesting and instructive that if you set up your businesses in a certain way, that it's up to the IRS to prove that your write-offs aren't necessarily legal. So now that we talked about what a tax loss carryforward is, here's how it actually works. Consider a tax loss carryforward to be the opposite of profit or negative profit for tax purposes. A negative profit occurs when expenses are greater than revenue or capital losses are greater than capital gains. This provision is a great tool for creating future tax relief. There are two main types of loss carryforwards: net operating loss carryforwards and capital loss carryforwards. This is one of the main strategies that Trump used in order to pay very minimal taxes on his tax returns. All right, so let's talk about the third write-off that Trump used, business tax credit. Business tax credits are an amount that companies can subtract from taxes owed to the government. Business tax credits are applied against the taxes owed, as opposed to a deduction that is used to reduce taxable income. Businesses apply the tax credit when they file their annual tax return. In the United States, the IRS oversees the application of business tax credits as the credits that are used to offset a company's financial obligation to the federal government. So a lot of people have business deductions, but business tax credits are way more powerful than business deductions. Business tax credits tend to be used sparingly by governments because they are such a powerful incentive. As such, people often confuse them with the more common known business tax deductions. The main difference between a business tax credit and a business tax deduction is that tax deductions are used to reduce taxable income, whereas a tax credit directly reduces the taxable liability. This means a business tax deduction of $5,000, for example, will only save the business a percentage of that $5,000. If a corporation is in a 20% tax bracket, then the $5,000 deduction is only worth $1,000 in reduced taxes. If the corporation qualifies for a $5,000 tax credit, however, they benefit from the full $5,000 in reduced taxes. So it's just a way more powerful way to write off a ton of shit. Hey guys, if you like the content you're watching, there is a Patreon that you could subscribe to where you get more exclusive content. I will share my journey of how I've made money in sales, things I'm investing in, some of the pitfalls that I've made as relates to investing in my career. I'll be sharing those with you so that you can totally avoid those too. So if that's something you're interested in, you can click the link below in this video and sign up for the Patreon. There's a ton more on here, but those are just the three that we're going to talk about. If you're watching this and you're upset right now, should you be upset? Like all rich people use these different types of write-offs in order to write off stuff on the income. When I was taking a look at this, I was thinking like, damn, I got to get out of like W-2 income and get into like 1099 income and have a whole bunch of LLCs and corporations and just hire a tax firm. And so when I'm making the same amount of money, a couple $100,000, it'd be way easier to find legit and legal reasons to write off a ton of stuff. This is kind of eye-opening to find out that, wow, rich people have such an advantage because for the average person, you don't have access to these write-offs like I pointed out earlier, like in this video. And so if you lose money, you just lose money. But if you're a business owner and you lose money, then that's actually a credit that you can use in future years. So once again, not judging it, just very interesting and something to think about. It just looks like poor people are just never going to catch up. Olivia, this is your first time seeing some of this stuff. Like, what do you think about it? This is like wild, right?
It's mind-blowing. As someone that like has their own business and I have to pay my tax bill on time and I have to be accurate with everything, it is shocking that like people that make that much money can get away with it.
Trump has a casino in Atlantic City. That investment didn't go so well. He wrote it off on his taxes, which gave him access to a $72.9 million tax refund that he's currently fighting. If he has to pay that money back, he's going to have to pay that back with interest, and he's going to owe the IRS $100 million. So is he going to have to pay that back? I don't know. Well, I don't believe Trump's going to jail. Based on the research that I did for this specific video, the IRS doesn't necessarily have enough manpower to actually really go after Trump. He's currently fighting to keep the $72.9 million refund. And yeah, if it gets reversed, he's going to owe the IRS $100 million. But like I said, the IRS doesn't necessarily have the manpower to fight Trump. I think this dispute's been going on for about 10 years now, and nothing's happened. All right, so let's talk about some of the key takeaways from this video. Hire a tax firm to see what you can legally write off. Clearly, the rich have tax consultants and various advisors that advise them on how to pay less taxes. Another takeaway, do everything you can to get to 1099 income and not W-2 income. Yes, it's easier said than done, but America, the IRS, the government, they seem to award entrepreneurs and the wealthy and not individuals that make W-2 income. Last takeaway, we all need to just keep getting smarter about managing money. If you're worried about a $5 Starbucks coffee, instead of understanding how to leverage like tax credits and conservation easements and other random write-offs that reduce your taxable income, your priorities are probably in the wrong place. That's all we got for today. If you like content like this, like and subscribe, and would love to hear from you in the comments, right? How does learning information like this gonna affect what you do in the future? Are you gonna take a look at writing off more things? Are you gonna take a closer look at your personal finances and making sure that you're writing off everything you can? Let us know in the comments. Until then, I'll see you in the next video.